Hello everyone, it's me again. I hope you enjoy your weekend and actually a long weekend. Tomorrow is a Labor Day, so there's no stock market in the US. The Asian market in the Hansen Index right now is about up. Nikkei has been up about 500 points, which is pretty good, as well as the market in China. So things were looking good, and the Bitcoin were actually about $50,000 now. Upcoming week will be pretty interesting, and hopefully it will be another rally for a week again to reach another record high. So before I get into last week recap and what we're thinking the events upcoming this week will be the focus. I just want to run through you some diagram really quick, which again based on some input from people who listen to my video forecast, and I'm just trying to improve upon and from time to time doing something different to make it more interesting, and so that you will be more engagement, people more interested to listen to my video. Also give me some feedback or questions that I can answer them and help them to make more money. So this is a chart basically showing up the unemployment change, the employment changes. You can see that the job actually in April 2020 was a really worst period of time, which is where Powell was saying is 20 million Americans were losing jobs, and up to 2021, you can see that there's a significant improvement. That now, I mean, based on this chart, is basically still have improvement on jobs and increase of jobs, but yet on Friday the reporting, which is kind of in alignment for what non-farm versus the ADP are showing slowdown of the growth and increase of jobs, which again not surprising as it reaches the fourth quarter. Coming on, we look at the budget and plan for the following year instead of focus for the current year. So I don't know if the number will be actually better. And again, also we don't know how estimate come about with these numbers. And ideally, they may take a quarter and they divide by every single week. So then it's always about 700 plus thousand of jobs that expect to be created on a weekly basis, while there's only 235 were being created, which was a lot lower. But yet the market was still looking positive, even though Friday was kind of hold back a little bit. And then the other graph also substantiating it, just a different kind of look on how U.S. unemployment rate looks like. And you can see that in the 2020 April timeline, this is also a spike up on almost 15% unemployment, and now as Powell was indicated in the latest number from the labor statistic department, that 5.2% were unemployed. But again, this number is not quite an accurate good picture in my opinion. I mean, there will probably this coming week will look even better, because a lot of called extended benefit state benefit that push it from the federal due to pandemic will be officially ended in September, week of September. So then a lot of people who didn't have job were still forced to be off of the chart, right? So again, people listen to my video knowing that I told you that the three group of people were not in consideration, maybe even four group of people not in this unemployment number. Number one, people who are forced to be early retired. They actually still want a job, but they don't have choice, so they tell people I'm early retired. Number two, people like me who didn't have a jobs and really looking for jobs, and maybe you take a job like taking serious pay cut to 75% because you're already out of unemployment. You have to have money to pay and support yourself, or you selling your house, you selling your car, you using your credit card debt and all this stuff, right? So the bunch of that group of people, the people who graduate from college who actually didn't were looking for job, but then the statistic number we're not going to pick it up from there, and then because they're not entitled to unemployment because they won't work, right? And then another group of people who actually were forced to off the chart, like the way I just described to you, and they were actually still looking for jobs, and they were not having a job, or they're having a part-time job that actually paying like 50% lower than what they used to pay, right? So these four group of people are not in this number that I think U.S. unemployment numbers severely and seriously still understated. And the other graph I would like to show you, which most of people are very happy about it, is again, how were things shaping up in the in the performance of the index, three major U.S. index. It is very interesting. Just trying to walk you through very quickly and looked at that. 2020 was a marvelous period for indexes or for investment or ETF funds for 2020. And on average, I was told that the fund manager were able to outperform the index and give an 80% of return. Whether it's true statement or not, I mean, you really need to ask your fund managers on that, right? Or you have the statistic on that. But then on the first quarter, you can see that the market was up really up to February, but then in March it was kind of the decline. So it ends up that the first quarter, actually, the index were lower than where you started at, and actually had a loss of 10%. I was told that was how it was look like. They were actually first quarter wasn't performed very well, but then in April it started picking up, and you can see that in May there was a dip, but then overall in second quarter where you ended at were a lot higher than where you started in January. So they actually the funds or indexes were having positive return again, and then you can see that dip again in the middle of June, and then you pick it up again, and there's another dip in July. Almost every month you can see a dip, in every single month, until now recent August was a very marvelous and very strong month, up to even end of August, and up to September. I mean, it was down a little bit at the beginning, sometime more August and mid-August, and then you still pick it up and end of August. There were a day down, but then overall it was up. So then it was really a really marvelous return so far this year, and you can see that the Nasdaq was where the best outperformer. It actually given a return 17.2% up to September 3rd, and then in the green one is Dow Jones Industrial Average, which is given 12.7%, and the S&P 500 given 15% return so far. So if the momentum continue, and let's say October wasn't crashing, September there may be a correction coming back down, and then keep pushing back in the push up high in fourth quarter. I mean, you could potentially, we can end up with Nasdaq with, or even S&P 500, which most of you talk about, another 7% high, I will predict, which then will push it to like 22%. So just something to want to show you that from the landscape of this perspective, how things are going to look up from a technical graph perspective, because most of the people were interested to want me to talk about how the graph and how things look like 50 days average, 100 days average. On the any ends right now, we are still in the uplifting, and you can see that there was I was thinking there would be a correction, but the correction actually didn't happen, and you all bounce back, pick it up. So you can always see the graph, how it looks like is that there could be potential keep pushing up, and then September 11th, if there are no issues, which you knew that there was time, if you remember the history of what happened with the crash of Wall Street, the building in New York. So if it didn't have any retaliation, a bad thing happened, the market could sustain it until normally, later of the week, which 21st and 22nd FOMC meeting. So I'm going to so this is hopefully this, if you don't listen to the rest of the video, you get a recap and the prediction what happened about in a month or so in the big picture. And also, I'm thinking about still talking about Chinese stock, where I was still thinking there will be rebounding coming back from a high, in like Pinduoduo $202 slide to $75, Bilibili from $140 slide to $65. Tencent was from like $40+ driven back to high 20s. You still have plenty of room. If you take the high end and where it was a low end, average it out, there's still another 5 or 7% to push it up to get to that average point. So just to give you an idea about what I think the Chinese stock, at least momentum rise, will push it up. The market also expected that with the COVID Delta variant and the week of the GDP growth and manufacturing index coming in Wednesday that will be announced for the month of September. About China, there will be some physical or monetary policy that will help normally smoothing things out to ensure that China will reach a GDP 8% by end of this year. So there will be, these number of things which you could have speculated will have things helping things out to push the Chinese stock higher. And also, when you get to a few more months from now, if the market wasn't crashing, the Biden 3.5 trillion, which ultimately may reach 2 trillion, there will be more money still out of the market, and then assuming the yield curve is still stabilized, maybe at 1.5%, definitely not more than 1.7%, you are still in a very good environment. So you could potentially still pushing for, even if the correction happened at this moment, I'm projecting it's not going to be a crash. So index-wise, you could drop to 7%, let's say 7.5%. So you can do the math, thinking about if now this point, which could have pushed a little bit, another 2% coming weeks before the correction happened, you would drop down to 7.5 to 10% more severely. But just a correction, it's not a crash, right? It's not a meltdown. Then you'll rebound back again with the V shape that you see in the month of here, the April time, the May timeline, right? And the March timeline, you can see significant down there. I mean, we have seen these before, so it's not surprising that you could definitely will happen upcoming in. I see visualizing this will happen, but then you will have rebound back, and then we'll see what happens in next year, and also the policy that are driving, the factors that whether you will be continue to pushing up when you're going down, because with the shortages of the things and the inflation that will transition already, so the space power still believe that. Then of course import goods. If you think about people that like enjoying Chinese food like mooncake, the price have been ridiculously much higher. You buy a box of mooncake in Chinatown now, $50. Last year was selling probably $38, $12 higher. Then you can do the math and what's the percentage increase. It's because of raw materials going up in China, labor costs going up, and also the most important significantly is the cargo costs, right? So just to give you some perspective, that and at this point, because you still short their chips, so the chip stock seems to be continue to go up. If they end up push a third shot of the vaccine, then the vaccine stock could have gone up again. But the vaccine stock is very volatile, so I'm not actually asking people, or recommending buying that. But the chips, vocal processing chips, you also very volatile. You have to look. If you drop in a dip, you can buy some before next year. When things back to normal. I mean, it's all about supply and demand at the end of the day. So I hope that helps out. And then still recommending, bowling. If you look at Dow Jones Industrial Average, still going to be bowling, still going to be Disney. Disney going to come up with a Chinese, another Marvel movie this month. Is going to be exciting. You have the Chinese actor in there. He is a very popular actor. Is going to be adding at the very end, the bad guy, and then the other guy, which I actually don't know him, but he probably very popular in China. Who knows? So it will be popular. This movie will be really well seller in Chinese market, as well as probably will pushing up in the U.S. market as well as the theater already reopened. So that's just positive for that one. And then I'm still looking at 3M, which is, if we drive it back down, you could have buying it in the Christmas time. They're normally pushing a lot of note packs, 3M note packs, and so on. And also, again, 3M is a very diversified company as well. So that is have a very strong leadership team. So you can think through this type of company. Caterpillar had a dip, but then I think it's rebound already last week. So if Caterpillar drop a bit, maybe you could consider as well. So those will be the one I kind of recommended. Dow Jones, and then S&P 500. Obviously, you can. FANG is still a very strong driver. Apple is coming with iPhone 13, which probably that's why the stock hit record high. So you want to pay attention to that and your watch list. And then you can also look at Google, which kept to be pretty strong, and Microsoft already hit over $300. So these type of stock, unless the bad news and the environment totally switch and changes, is still very considered favorable. They have been very resilient, speeding up the market, consistently performed. So these stocks may be really worth where they are. They may still overvalued, but if you have to, a lot of times it's just a comparison. So and then in Tesla will be another one to pay attention to. EV stock, I still think there's a future, but at the moment I would not necessarily buy EV stock yet and wait a bit on that. HYLN, I'm still waiting for Austin building the office and have some new and bad good news out there. And then there's another one called SLQT. You guys can take a look at that. The stock had dropped 60% in one day after the announcement, but rebound back very nicely with momentum. There will be a conference call this coming week, so this stock may be able to push up to, I don't know, $13 or $14. But I just recommend my friends to buy it at $8. So just FYI, now it's $12 already. So I didn't broadcast it into the last week video, but you definitely can still take a look and think about if this stock is profitable as well. And then they were at $30 last year, in April 2020. So you can take a look at it and consider if for a long run this will be a stock for you. Okay. And just give you highlights on what happened last week. US stock actually higher to notch new record high Monday, except Dow Jones doesn't show if average with investor optimistic about outlook on Fed again asset tapering. And 98% in the S&P 500 report second quarter earning growth on index expected to come in and over 90% based on Bloomberg data, said Piper Sandler's chief market technician Craig Johnson. Snap posted its fourth quarter string of profits starting Q3 of last year. 4 quarters of accelerated revenue growth culminated in a 116% gain in the second quarter. On the technical side, Snap stock is riding nearly above its 50-day and 10-week moving average. In its Q2 earnings report for fiscal year 2020 released last week, Salesforce beat analyst expectation while providing upbeat forecast for the remainder of the year. The stock went up close to 52-week high but dropped slightly Monday. Out of 40 analysts polled by investing.com regarding their consensus estimated pricing target on CLN, which is Salesforce, the board majority rate is outperformed, which was target average of $297. Apple jumped to all-time high while Microsoft, Amazon.com, Google were higher. NetEase NTES slumped as Chinese regulators slapped the amount of time players under the age of 18 can spend online game. This NTES is an online gaming company, Chinese company, just FYI. Tencent is also the biggest one, which have a very popular game, all-time popular game, let's put it that way, in Tencent in that stock. So they don't have a lot of games, but the two of them outliers that were very, very popular. So with this, it may have some impact on their earning, but we're yet to see it. U.S. stocks slipped from record high Tuesday. Consumer price confidence index fell short from expectation of 6-month low, indicating America have been less inclined to purchase big ticket items. Zoom plunged as much as 17% in the early trading after the company forecasted if revenue will roughly flat out for the rest of the year. Google was high, but Apple, Facebook, and Microsoft ended the day in red. The 10-year Treasury yield edged up to 1.305% from 1.284%. 1.3% still a very low number, still a very good number. And last trading day of August, the real estate sector was high, upset with the slide of high-tech sector. Crude inventory showed a draw of 4.045 million barrel. Expectation before a draw of 2.83 million barrel last week. Oil stock rebound from previous low. Hurricane Ida is set to push up gas price and oil price higher and around $68 level, and actually probably will go back to $70. And look at the graph again, just bear that in mind. So in the ending of August, all three indices almost again at the record high again. So in the month of August, it was still a very remarkable time, as far as I'm concerned. I mean, we'll see if September going to be continue to be as strong. The Nasdaq Composite Index hit record intra high Wednesday after weaker than expected ADP employment data spurred hopes of further Federal Reserve report. Power payroll rose by 374,000 in August, a figure that missed the estimate 613,000 from the economy survey by Bloomberg. However, another set of data on Wednesday showed U.S. manufacturing activity and expected pickup in August amid strong order growth. Shares on CK and Tom Hilfiger PVH surged to the top of the S&P 500 after they raised a full-year forecast. FANG were were also high despite the tech was doing well. Dow Jones was hurt by a slip of Caterpillar shares. So like I said, Caterpillar stock is slip, but then you rebound back a little bit. So this is also another stock in Dow Jones that you can pay attention to. Global stock rose on Thursday after data showing hiring slowdown in U.S. that fueled expectation for a Federal Reserve to keep existing stimulus measures in place and delay that tapering of its asset purchase. The initial unemployment claim in regular state fell 14,000 to 340,000. In a week ended August 28, Labor Department data shows Thursday. That's the number. So again, even the number wasn't look as good. The market was still up because it was thinking, you didn't really hit continuous employment target like Powell was saying. So then there possibility with the Jackson Hole what he said, and with that after week after, you will actually make things, delaying the possibility of progress of tapering. So that actually went to the market look good. Chewy stock fell 9.6% after the online pet supply retail report bigger than expected quarterly loss. 5 below FIVE stock fell 8.4%. So discount retail missed expectation. The same quarter revenue. Whole Foods symbol HRL stock also fell 1.3%. ChargePoint stock sour over 15% again after the EV charging infrastructure company raised its guidance for the year as EV penetration in Europe and US. As a sector, energy gained more than 2% on Thursday. Then on Friday, market fell after August job report badly missed economic expectations. The U.S. added 235,000 payroll in August, which I told you at the very beginning, badly missing the median estimate of 733,000 added job. A majority of 11 S&P sectors will end up lower, with the energy financial index among those finishing in red. Crude stock were the biggest decline. WTI ended at 69.24 per barrel, which is, this week could have hit $70 we'll see, and gold reached 1,831 per ounce. After all, Dow Jones was down 0.24%, 86.71 points for this week of September. First week of September, the S&P 500 was still up 0.58%, 26.06, and Nasdaq was up 234.1.55%, which is very strong and record record. Reuters has also reported that OPEC will raise its 2022 oil demand growth forecast to 4.2 million barrels per day from its previous low of 3.28 million barrels per day. Crude demand in China started showing signs of strong recovery after the country reopened its economy, and Beijing moves closer to finalize and probe into independent refinement. But we'll see China is facing economic slowdown and how's the effects of this new policy. So we will see that, reporting that obviously the barrel demand and it always fluctuates every single week, but that's part of the job, right? That's why people do forecasts. But if you look at the overall sign and thinking about it, I mean, we knew that Chinese market China at this point economy-wise is slowing down, so they possibly have policy to push it back up. But and oil demand, I'm really not sure if this is a correct statement or not, because you talk about future, so we'll see it. But if China have a demand increases, most likely the oil price will go up about $70. And it is on track to lock on one of its best year-to-date return through August of the past 6 decades, said Chris Leckin, Managing Director Trading E-Trade Financial. U.S. futures mixed right now, so market is, like I said, it's not open tomorrow. So right now, there's this stuff, just I quote from Tom Lee. We believe that everything rally is intent, and we expect market to see strong gains over the next 4 weeks. Tom Lee, have a research fund stress that interesting note. This is from last Tuesday. He said that, and then like I told you, I have a good respect of this guy. So far, he forecasting everything in the big picture was correct. With a highly anticipated federal FOMC meeting next month, on top of surging COVID-19 cases, investors should be on the outlook for some seasonal volatility in September, which is historically the worst month of the year for stock that track LPL financial sheet market strategies said. Just like I told you, right? I mean, there's no surprising that September could be the worst month, but at the beginning, so far so good. So we will see if this coming weeks also rally before the September 11, which could be critical. If nothing happened, that's great on that day, because historical, I think that 1 year they did have some incident happen on that day. Given there's going to be some choppiness in the economy recovered because of COVID, people will look for where they can find the best future growth potential, said Chris Groff, co-chief investment officer at R&B Capital. That's another one. So what to watch for the following week? Okay, GameStop earning. You'll be interested to see how the investor will react and performance of game based on the performance of GameStop. You know this stock have been gone up very significantly, a few 100% this year. And at one point was planning to buy it, but I didn't get it, and then you just keep going up. US will be releasing a PPI. Where it's also going to have an impact. It will be a good indicator about how the economic in US recovery and the inflation that we perceived in the future. Kogo retail grocery will also announce earnings on September the 10th, which also a good indicator how inflation, future purchasing power, and where there's a lot of demand, how they're forecasting the consumer going to behave based on inflation beliefs. Fed potential tapering will also continue to focus on next week until September 21st, 22nd FOMC meeting. With an unemployment number that was actually look good, but then the payroll creation was less previous week, which payroll number may be a better indication, but also at the same time, I think the dollars will make more sense, because think about, if a job used to pay $50 an hour, well, he can split it to pay $11 and hire 4 people. That's $44, which is still lower than $50 an hour, right? But yet they can say I can create 4 jobs. Right? Because they do one expensive job, create 4 jobs, and they say the economy is great. Is it true? Now, so sometimes personally, I think the dollars, the spending, the money is more material than the volume in a sense. Because if you want to push back the unemployment rate lower, there's always strategies and a way to doing it, right? But it doesn't mean the economy actually better. That's why you're also using other indicators like how your CPI, what is the consumer price index, how much people consumer confidence is going to go out to buy more retail, right? And so then that stimulated the economy, right? How people perceive the gas station prices, the oil prices, how people perceiving, and also the real estate, right? With the more purchases, I'm also saying more transactions going on with the market rate per dollar per square feet. That would be a good indicator. That's just again why some of these stuff, I think they were traditionally using old way to measure how the market look. They have been consistent doing it, and from a comparison perspective, it may make some sense, but that is not necessarily a good indicator of in the future. And a lot of companies, that's why they're trying to drive and create a lot of new KPI, because they realize that there's a lot of gap when they're trying to push through, and sometimes you're really pushing a bad behavior because of the KPI was not really relevant in today's world, because we realize we're in a very dramatic changes world, right? So, and China economic policy again, yes. Also, I don't want the investor to be too sensitive and keep thinking these policies are bad. Some of the really, really good focusing on changing, improving the future, but it is in a transitional period where some people may feel the pain, but when you stabilize and they test it out for a few months, and they will also have some more policy change. So I heard people were always commenting that Chinese policy always change, right? But U.S. government also changes policy all the time too. So I'm not sure why what we're saying is like in a negative tones on that perspective, because it is supposed to be doing for good, right? And I hope this really will drive, with the softness of the economy, the stimulus policy in China will drive the confidence of GDP will be meeting 8% this year, and so does like I said, some of the retail, which currently in November 11, December 12, where the sales coming from. So you will see Pinduoduo, Tencent, Baidu, these stocks will be driving up, and also they already passed the earnings season, last quarter previously earnings, so we have to wait for the next one. Hopefully then you will be hitting for higher. So again, you have to ask yourself how you set up yourself as an investor to be success. And I gave you the stock that was buying at a dip. And if you will have profit very quickly in a week or two, 20%, which is rule of thumb that I teach you, again, based on your preference too, you will have selling it if you're a short-term investors, right? I don't recommend buying options again, but it is subject to you. If it works for you, that's great. Hope you enjoy my video, and I hope you're going to have a wonderful Labor Day. And then this coming week, the market will continue to rally for another quick, for another highness of breaking through the record high. Thanks.